Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this episode 3844 and today's date is February 19th, 2026, and the title of the episode is Central Bank Mission Has Always Been to Destroy Gold as Money. Fed released fake study on tariffs. Now, let me ask you a question. What if you could do more with your retirement funds than just hope for the best? With My Digital Money, you can build a self-directed IRA that goes beyond the usual, combining Bitcoin, gold, and silver for real peace of mind. Imagine Bitcoin's explosive growth, the steady strength of gold, and silver's wildcard potential all working together in one powerful account. While the market zigzags and headlines keep you guessing, these assets help shield your future from inflation and uncertainty. Why let your future hinge on just one bet? With My Digital Money, you're in control. We allow you to invest in crypto, gold, and silver all under one roof, balancing risk and reward and opening the door to bigger opportunities. Don't settle for ordinary. Build a more balanced, resilient portfolio today so you can retire with confidence. Visit My Digital Money and see how easy it is to diversify and protect your retirement today. That is mydigitalmoney.com, or just click the link in the description. Let's get right into the economic collapse financial news. Now, the deep state, the corrupt politicians, the private West Central Bank, the World Economic Forum, we can see that they're trying to stop any way they possibly can. And right now, we can see there's a group that is suing Trump, saying, oh, we shouldn't be using tariffs. And the Fed just put out a study saying that the people of the country are going to be paying 90% of the tariffs. Now, once again, we've seen things like this before. This is nothing new. And if you go back to the time of COVID, the Lancet put out a paper basically telling you that hydroxychloroquine increased deaths. And again, this was supposed to be the standard, the be-all, end-all of documents. And what we've come to find out is that the data was fake. We saw there was a lot of inconsistencies. It didn't make sense. And all of a sudden, the Lancet paper, they decided to retract it because basically it was put out there to convince everyone that hydroxychloroquine causes death and it doesn't cure COVID. Fast forward to today, we have the Federal Reserve putting out a paper, a study, trying to convince the people that the people of this country are going to pay for the tariffs and you're going to see massive inflation. Now, once again, we know that inflation has been going down. Even when you look at the Fed calculations, the inflation has been going down. Actually, inflation right now, I think with the Atlanta Fed, which we'll be talking about in just a sec, is down around 2%, 1.9%. So right there, that tells you everything you need to know. And we've had Trump's administration come out and bash the study, saying it's absolutely ridiculous, which we'll be talking about in a little bit. It's almost like it reminds me of the entire global warming climate change, where they said the earth is getting warmer, the oceans are basically rising, the polar ice cap, there will be no more ice, there'll be no more snow, you'll never see another snowfall again. Well, they said that 10 years ago. They said that 10 years before that, 10 years before that. And again, what do we come to find out? They've been lying to the people from the very, very beginning. And they lied about wind power. They lied about solar power, where they keep using the term clean energy because they never tell you anything beyond that. Hey, look, we're just going to use the energy from the sun. They don't tell you it takes a massive amount of oil to keep the windmills lubricated. They don't tell you that the blades are toxic and they really have no idea how to get rid of them. They don't tell you that this doesn't help with energy costs. It actually makes energy a lot more expensive. They didn't tell you all of those things because, again, they were trying to push their agenda. And I think Chris Martz looks at nuclear energy, solar energy, and onshore wind energy and explains what they actually meant by clean energy because they only look at one little part of it, not the entire picture. Now, once again, there's nothing wrong with solar energy, wind energy, but I don't think we could just take it and replace the energy that is created by nuclear, by gas, by oil, and say, hey, let's just remove all that and go right on to clean energy, which it's really not clean energy. So again, yes, can we have a mixture? Absolutely. Just like we can have a mixture of cars that are powered by gas and cars that are powered by electric. And you have to remember, electric is generated by what? By oil, by nuclear, by gas. So you're not really getting rid of that. You're just basically pretending that, hey, look, I'm driving an electric car and I'm using electricity, but the electricity comes from someplace. And this is what people kind of forget. But Chris Martz put this out and said the term clean energy is stupid. Why, you ask? Because the term classifies different energy sources as being either dirty or clean, depending solely on their life cycle carbon dioxide emissions. No other criteria are considered. Clean ignores other environmental drawbacks, such as the land footprint and material intensity of different energy sources. And on those scoreboards, renewable fail. Objectively, the cleanest energy source is nuclear. It has the lowest carbon intensity, lowest material intensity, and smallest land footprint. A single 1,000 megawatt nuclear facility occupying 1 square mile of land, operating with a capacity factor of 0.923, can power approximately 770,000 homes over the course of a calendar year. To power the same number of homes as a nuclear power plant, it would require solar, 4,000 MW of installed power, and 30,000 acres of land, 47 times as much land. Onshore wind, 2,700 MW megawatts of installed power and 86,400 acres of land, 135 times as much land. And these figures don't include the additional space needed for battery storage. None of that sounds very green to me, even if some of the land remains usable, which it does. Nuclear fission is what the West would be scaling up if our nations were governed by serious people who would deregulate it and let the market boom. Without all the compliance regulations, costs would fall like they have in China. I'm not entirely against solar, however. It has its place in the mix, but unless it is being placed on rooftops or is for individual off-grid use, I don't want to see forests fell to build them. My calculations for the figures above are derived from the U.S. Energy Information Administration capacity factor data and U.S. homeowners' average electricity consumption. So yes, they were pushing the idea of wind and solar because, again, their plan was much larger than anyone could ever imagine. Their plan was to have 15-minute cities. The plan was to have depopulation and have the people trapped in those cities. And again, do you really think they care if electric is on or off? Absolutely not. Who is going to be using the other sources of energy? Well, I think we all know it was going to be those individuals that weren't living in the 15-minute cities. So once again, you could see their agenda completely and utterly fell apart. Trump has canceled all of this because he knows the truth. He knows what they were planning to do. And he knows if we're going to be a manufacturing powerhouse, we cannot use wind. We cannot use solar. We need actual energy. And I think this is why most likely his company, True Social, they are looking and made a deal with a fusion company that is going to create these smaller nuclear power plants to power data centers, to power certain things. So you could see the direction that we're heading in right now. No, this is not going to be the only company. There's going to be many companies that are going to make these compact reactors, which they could be used to power many different areas. And the footprint is going to be very, very small. Now, the other thing that's very interesting, they keep talking about the Federal Reserve and how it has to be independent. The president can't get involved. Nobody can get involved because, again, they did this on purpose because they didn't want anyone looking into the business. They wanted the central bank to be a separate corporation. Oh, that's right. That's what it is. It's a separate corporation. And they had a different agenda than the people of this country and maybe a president that came in that wasn't part of the entire deep state system, like President Trump. But when you look at other nations and you look across the pond, you could see that Christine Lagarde, which we mentioned yesterday, she is now leaving, even though her term is not up. I do believe she probably sees the writing on the wall. Now, the question is, are they going to leave the EU completely independent? And are they not going to get involved in who is going to actually take over? Collingwood put this out and said, remember how Donald Trump is destroying the foundations of sound monetary policy by pressuring the Fed to lower interest rates, thus bringing into question central bank independence? Remember the press hysteria? So what's going to be the response to the president of one Eurozone nation cooking up a scheme with the French? ECB President for her to resign early to prevent the current French opposition from having a say in who will be the next ECB president in the event that they win the next French presidential election. Doesn't that maybe impinge on central bank independence? Or will Macron get a pass, like he did when he ruthlessly and violently put down Gilets jaunes Democrat protests, or when he threatened to cut off British electricity over a fishing dispute, or when he engaged in anti-vax rhetoric to try to rubbish the AstraZeneca vaccine? I think we know the answer. If you're a member of the club, it's all okay, because anything you do is, by definition, protecting our democracy from those who might want to take our democracy away from us. The French have shown yet again that they should be disqualified from ever holding office at international or supranational institutions. Such positions call for independence, but they always remain agents of French national interest as the French establishment sees them. And this is absolutely true. And you could see that, once again, these individuals, they're installed. The person that's running the ECB is installed. The person that's running the EU is installed. Macron is installed. Starmer is installed. Merz is installed. Sanchez is installed. They're all installed. This is why they have no problem in meddling in the affairs, because, once again, they have certain rules, and it's not the same rules that everyone else has. Now, the other thing that's very interesting, here in the United States, we could see the Fed is putting out the idea that before Powell leaves, the Fed might increase rates. Is this going to be a parting gift? Is this to basically push the stock market in a different direction? Because out of Market Watch, the headline is Fed minutes reveal discussion of a possible rate hike if inflation doesn't cool. But the strange thing is that inflation has been cooling. And when you look at the inflation calculation, even the one that the Fed uses, you can see that inflation is cooling compared to what Biden did. Biden raised the inflation up to 9%. When it dropped 2 points, the Fed was like, woo, look at this. Inflation's down to 7 or 6. We can lower the rate. That's ridiculous. Trump has the inflation at 1.92% right now, if you use the Fed calculation. And they're trying to make it seem like, well, we don't know what inflation's going to do. I mean, it's so close to our benchmark that things might go crazy. I mean, it's absolutely ridiculous what they're doing here. But I do believe we understand what they're doing. They're trying to put this out there, and I wouldn't be surprised if Fed Powell tries to raise the rates to probably push the economy into a completely different direction and maybe have the market go a little bit crazy. But we'll have to see how this all plays out. But the other thing that's very interesting is that EJ Antonio PhD put this out and said, hey, you know what's interesting? We've all seen the headlines about those miracle weight loss shots, but the 2026 data is officially in, and it's a wake-up call. A major analysis revealed that once people stop the injections, they regain an average of 60% of their weight within a year. Even worse, most of the gain is pure fat, but the muscle they lost stays gone, leaving them with a crashed metabolism and a body that's functionally older than when they started. That's why I'm obsessed with today's sponsor, GLP-1 Elevate. Instead of using needles to override my system, it uses clinically studied plant-based ingredients like metabolate to help my body naturally boost its own hunger control signals. I get the same fullness and fewer cravings, but without the scary side effects or the metabolic rebound. It supports my goals while protecting my muscles, so I can actually keep the results for good. To celebrate Valentine's Day, get 50% off GLP-1 Elevate at trimwithx22.com. Every order includes a complete support bundle with a free VIP coaching for life, a 60-day money-back guarantee, and free express shipping on subscriptions. Head over to trimwithx22.com now to claim your 50% discount before it expires, or just click the link in the description. No hire, no fire. The pay premium for job changers varies considerably between industries, but average premium has now fallen to new low in the data series, which goes back to the 20s. Peter Sayong responded to this and says, pay jump for quitters returns to pre-COVID. The question is, are we in the dreaded no hire, no fire job market, or are the millions who quit during COVID finally back in the job market? Then he says, longer view, anything above 4 is decent. We're at 4.1. And this is the 12-month moving average of unweighted meridian hourly wage growth. And basically what we're seeing right now is as Trump deports the illegals, it is opening up a lot of jobs. which means a lot of people now who are sitting on the sidelines, they're going back to those jobs. And we're going to see more and more of these jobs. Just like when you look at the rental market, rents have gone down dramatically. Why? Because Trump has been deporting the illegals. Wall Street Maverick put this out and said, listen, look at all these different articles that they put out. Apartment rental prices decrease in Knoxville. Apartment rents drop further with vacancies at record high. So basically, let's see, the deep state players, they were placing illegals into rentals. The government was paying for these rentals, and they kept raising the rates because, once again, if the government is involved, this is what happens. Now that Trump is deporting all of these people and the government is no longer paying, what happens? Well, it spurs competition. And now they want people to take these apartments because now they don't have the money coming in. So what are they going to do? They're going to lower the price. Wall Street Maverick says none of them mention deportations as a factor in what is causing this trend. Trump has deported, or they have self-deported, over 2.5 million illegal aliens. And that's pretty much why this is all happening. But again, they really don't want to mention this. Just like they don't want to mention how all the people from Mexico and other Latin American countries, they come into this country and they send the currency outside of this country and into their countries. And what's very interesting is that there are no remittances taxes. So basically, they are funding their countries from the United States. This looks like a very interesting pattern because isn't this what the Federal Reserve is doing? Isn't this what the deep state players are doing? They're taking the money from this country, sending it over to other countries and funding those countries, funding those social programs in many other countries. We have these individuals that are working here, sending money to their country, and there's no taxes whatsoever. Don't you find that odd? Why wouldn't there be a tax on people sending money out of this country, all the remittances? There should be at least 50% because they're taxing everyone here in the United States. Why aren't they taxing these people? Because, again, this is by design. That's why. If you look at the central bank model, the model is to move everything out of this country, not keep everything in this country. And what's very interesting, I think Danny Nez pretty much sums it all up when we look at inflation and we go back to 1971. Because when we go back to 1971, we know that once we came off the gold standard, the value of the currency continually declined. And they didn't want anyone looking at gold. They wanted everyone looking at the pieces of paper. And what happened was, since that value, the value of the Federal Reserve note, which that's exactly what it is and was, it kept devaluing. So they had to move the manufacturing companies and other things out of this country. Now, those businesses that couldn't be moved out of this country, well, they had a major problem. And that's why they brought in cheaper and cheaper labor to try to counter all of this. But again, it didn't really work. And what did you see? Well, all those manufacturers that produce clothing, that produce TVs, that produce computers or toys or anything like that, they were produced or manufactured out in a country where people got pennies on the dollar. Very, very cheap labor. And then they brought it back to this country with no tariffs whatsoever. So this way, people would be happy. Oh, look, the TV went down in price. Now, of course, yes, their production costs go down. Manufacturing gets more streamlined. But again, as the value of the currency declines, you needed a way to manufacture cheaper and cheaper and cheaper products. And that's why you see TVs, well, they're down by 98%. Computers are down by 75%. Toys down by 74%, and so forth and so on. Look at all the things that couldn't be shipped out of this country. And yes, the government, yes, is involved in a lot of these. When you look at hospital services, it's up 275%. College tuition, 196%. Childcare, up 185%. Medical care, up 129%. Housing, up 111%. Food, up 104%. Ask yourself a simple question. Why? Because the value of the currency continually declines. So basically, the things that you need, the prices went up. The things that you want, like TVs, computers, TVs, and things like that, dropped. So think about that for a second. So basically, the things that you actually really need, the prices went up because they couldn't move them out of this country. And that tells you everything you need to know. And like we said from the very, very beginning with that headline from Market Watch, it seems that E.J. Antonio, PhD, pretty much counters that entire argument and says, and now it's Atlanta Fed's turn. Inflation expectations plunged to 1.9%, now below the 2% target and the lowest level since 2020. So much for the, well, tariffs are going to create inflation. So the question is, why do they say inflation is heating up? Because again, they're trying to put a narrative out there and they're trying to convince people that it's getting worse. But people are realizing things have leveled off and we're not seeing the inflation that we saw before. Now, the inflation that they're talking about, that people have experienced, came from Biden/Obama administration. Because when you saw inflation at 4%, 7%, 9%, then coming down the other way, 6%, 3%, you have to add all that up. That's the inflation. It's cumulative. That's why when Trump came into office, inflation was ridiculous and people noticed it and they tried to shift that onto Trump. But the numbers aren't showing that. Yes, when you go to the store, you're experiencing what Biden/Obama did, what the Fed did. And this is why they had to come out with this article. And it's a study from the Federal Reserve, the New York Federal Reserve. And it says you're paying 90% of Trump's tariffs. That's the headline from the Wall Street Journal. From the Federal Reserve study, it's letting everyone know that American businesses and consumers are shouldering the 90% of the cost of Trump's tariffs. So they put this out and they're trying to convince everyone you're paying for all of this. Now, once again, is this a study that is nonpartisan or is it partisan? Well, I think we know the answer to that question. And Kevin Hassett said the following: the people associated with this paper should presumably be disciplined because what they've done is they put out a conclusion which has created a lot of news that highly partisan based on analysis that wouldn't be accepted on a first semester econ class. And basically, he breaks it down. And he says all these things aren't true in what they're saying. They looked at one little part of it, and that is it. So from his perspective, the study is fake or fundamentally flawed because it ignores broader economic dynamics and positive outcomes from the tariffs. Specifically, he criticizes the authors for overlooking key aspects of how the duties worked by narrowly focusing on import prices changes while failing to account for the upward impact on wages and benefits that U.S. companies see by bringing more production onshore. He claimed the tariffs have led to real-world benefits that contradict the paper's conclusions, including falling consumer prices, lower inflation rates, declining import prices, and an average real wage increase of $1,400 for Americans. Hassett argued that if the study claim of 90% of tariff costs being borne by U.S. firms and consumers were accurate, consumers couldn't have been made better off by the tariffs, which he says is disproven by these empirical improvements in living standards. He implied the analysis is partisan and substandard, suggesting it was poorly vetted before publication. For context, the New York Fed study itself uses U.S. import data through November 2025 to regress changes in foreign export prices, proxied by unit values excluding tariffs on tariff rate changes, controlling for product and country-specific factors. It concludes that U.S. importers bore about 86 to 94% of the cost via higher prices, with foreign exporters absorbing only 6 to 14% alongside supply chain shifts like reducing imports from China. Hassett's critique centers on the methodology being too limited as it doesn't incorporate macroeconomic effects like domestic job and wage growth from reshoring. And that's absolutely true. And once again, this reminds me of the Lancet paper when they put it out saying that, hey, we collected all the data and hydroxychloroquine causes more deaths than it helps the people. And then people started to look at the paper and go, whoa, wait a minute. What did you do here? This is all fake data. What is this? This is not true. You skewed everything. And you know what the Lancet did? They retracted it. What do you think is going to happen to this paper? In the end, people are going to call it all out, just like it's being called out right now, and they're going to backtrack on all of this. And you have to remember, the central bank is panicking right now because the Trump administration is doing what? They're building a system that is going to compete against the central bank. The central bank doesn't like other systems competing against it. It doesn't like any type of money competing with the paper currency. This is why, for a very long time, they've been just trying, with the best of their ability, to destroy gold from the very, very beginning. This is what they've been trying to do. And Alistair McLeod put this out and says, and I'm going to read part of it, the plan was to kill off gold as money. This was their entire mission since we came off the gold standard. Following the inflationary 70s, which almost destroyed the post-1971 dollar-based fiat currency system, there can be little doubt that the deep thinkers in the U.S. Treasury thought long and hard as to how to drive inflation out of the economy while promoting the dollar to kill off gold as money. The solution chosen came in three distinct policies. The first and most obvious was to reform the financial system so that the banks would wrest control of financial securities from the brokerage industry. This resulted in London's Big Bang implemented by the Thatcher government in the mid-'80s at the U.S. Treasury's behest. A capital-starved securities industry would become turbocharged by bank finance, ensuring a perpetual bull market in financial asset values, including government debt, and ensuring everlasting demand for dollars. The second was to reform statistical calculation for key economic indicators, such as consumer price inflation and jobless figures, giving a measure of government control over them to create the illusion of currency stability. Not only was the indexation of cost of pensions and welfare thereby contained, but interest rates were permitted to be lower than they would otherwise be. All economic statistics are produced by government agencies who control this information. The third was to sanction and encourage derivative markets to expand, and by doing so, divert speculative demand from physical markets for gold. This was to prevent gold prices from being driven higher, threatening the status of the dollar as a medium of exchange. It was the basis of the massive expansion of the gold trading on the LBMA and of gold futures under the control of the large U.S. banks, which would occasionally act as agents for the Exchange Stabilization Fund. So those were the three ways that they did this, and you could see that they're still doing it. Because again, the banks were all in on this. The government calculations were all in on this. This is why Trump said, you know something? I'm going to put my own guy in the BLS because I'm looking at the numbers and they're completely fake. This is why I do believe Trump has been calling out the Fed and saying the models are all wrong. Because again, their models do what? They support the private Western Central Bank. They do not support sound money. They do not support the people of this country. They don't support a sound economic system. They support a central bank system. That's what it does. And this is what Trump is breaking down every single day. And this is why they're trying to stop him. They're trying to stop him by bringing the tariff case to the Supreme Court. They're suing. They're trying to stop him by putting out these bogus studies. They're out there trying to do whatever they possibly can to try to stop what he's doing, because they know in the end, when his system's up and running and it competes against the Fed is screwed, which means their entire system, the entire central bank deep state system, disappears. Because again, once we have an income-based system, we don't need a borrowing system, and we don't need to steal the wealth of the people. And every day you can see that Trump is building upon this. He put this out on Truth. He said, the United States trade deficit has been reduced by 78% because of the tariffs being charged to other companies and countries. It will go into positive territory during this year for the first time in many decades. Thank you for your attention to this matter. Isn't that interesting? It's going to go into the positive territory because of the income generating machine. Basically, as it gets stronger and stronger and stronger, the central bank is going to get weaker and weaker and weaker. And soon, Trump is going to show the people what real money looks like, what a real economic system looks like, what an income-based economic system looks like. And when you compare this to the fiat currency, which is backed by nothing, that loses value every single day, Actually, it's lost 3,000% of its value. When you look at the borrowing system compared to the, people are going to see the difference between all of it. And once people get a little bit of a taste of it, they're never, ever going to want to go back. The central bank days, they are numbered. Soon, it will cease to exist the way we know it today. Listen, everyone. Thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.